Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record a video per week, so make sure you ring the notification bell to get notified each time one comes out. I received a question recently that says, I only recently learned about how dividend payout is balanced out by the reduction in stock price. I am puzzled if it's even worth investing in dividend stocks. So I'd like to answer this question and then go into a pros and cons of dividend investing. So first of all, how this works and what the question is referring to is if you have a $10 stock that pays out a $1 dividend, you now have a $9 stock and $1 in cash. The dividends aren't free, they weren't conjured out of thin air. They are shown as a reduction in the stock price. And if no other movements in the stock price were happening that day, you would clearly be able to see where the dividend came out. That is just basic accounting. So let's keep going and do some pros and cons, or rather cons and pros of dividend investing. And let me preface all of this by saying I am a dividend investor and I am living off the dividends, using them to buy groceries, pay the bills, etc. So the first con is dividends aren't free. That is just echoing what I had said earlier, and that is just basic accounting. Now, one of the things that dividend investors say is that they like to buy companies that pay and increase dividends on a regular basis, that way buying strong and good companies. So companies that pay dividends consistently and they raise their dividends are good companies, but you could also look at metrics like EPS, or earnings per share, and the growth of the earnings per share to get an indication that the company is a strong one and it is doing well. So you don't have to be collecting dividends in order to know that you're investing in a strong company. The next counter to dividend investing is that people say, I want to reinvest the dividends and I can purchase something else. But generally, if you invest in a company, any company, you are expecting that they will grow your investment and they will use the money that you give them and get a good return on that money. So if you are expecting that from any investment, why would you not trust them to reinvest their profits instead of paying you dividends and get a good return on investment that way? Especially if you're going to use the dividend money to go to the pub, I would say that you're going to get a much better return on that money if you just leave it within the company and have them grow it. So looking at these, dividends and growth investing so far look roughly the same. So let's take a look at some of the pros. Historical research shows that over a century, small value companies will beat all other types of assets. Value companies means that they are cheap and or paying dividends. So over a very long period of time, small companies that are paying dividends and or are cheap are going to beat growth by roughly 2% a year. However, there are definitely stretches of time, sometimes decades long, like from 2008 to the 2020s, where you have cheap money and you have growth in the economy, and therefore growth stocks will do well because people are piling into them. The second pro of dividend investing is that psychologically, people feel good about getting quote unquote paid to wait and not having to dig into their principal and sell a couple of shares here and there to get cash flow. Therefore, it keeps them invested. And that is very important, not to sell out at the bottom of a bear market. And if that's the only benefit that dividend payers have, that is worth it, because it is really, and this is a cliche, it is the time in the market, not timing the market. Another thing, especially in North America, the corporate culture is that cutting dividends is bad. So companies will try their utmost not to cut the dividends, and therefore they're going to keep paying you even in a down market. If you were a growth investor that had to sell a couple of shares here and there, you would be selling them after they went down, which is not great. This way, without you having to make that decision, you're getting cash flow from the companies who are trying their utmost to keep paying that cash flow. Now, of course, the net worth works out exactly the same, because that cash flow is coming out of the assets of the company, but it is still better than having to sell something that went down, and the companies will try to keep paying you so you can keep buying groceries. And lastly, in Canada, in non-registered accounts, for Canadian companies, some of them pay Canadian eligible dividends, which in those non-registered accounts get taxed preferentially. And so if you have no other income other than 50,000 or so, depending on your province, in Canadian eligible dividends, you pay no taxes on that. And up until about 130,000, you're paying a lower tax rate on those Canadian eligible dividends than you would on capital gains. So from a tax perspective, you are encouraged to have dividend payers, Canadian dividend payers. Foreign dividend payers get taxed harshly on their dividends, so that's a different story. So these were the cons and pros of investing in dividends. It is a personal preference, and you should still make sure that you're investing in good companies based on their metrics, not just on the fact that they're paying dividends. In fact, if the dividends are not sustainable, that would bring down the share price, and of course, that would bring down your net worth even worse. So be on the lookout for unsustainable dividends. And if you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.